It gives me great pleasure to welcome Mr. Anil Agarwal of Vedanta Group on the show. Mr. Agarwal, good morning. Thank you for joining us. I always look forward to our interactions. This time around, I guess the first question has to be obvious. The impact of coronavirus. I have not seen it, you've not seen it, no one has seen this kind of an gut-wrenching fall in financial markets. What is your view of world? We are clearly not living in normal times.
Yeah, sure. The world is not clear. I think the whole world leaders are developing their strategy, what to do. And everybody, like in Africa, they have sealed the border. America doing what they need to do. School, college, cinema hall being closed. Everybody is cautious. India, I think our Prime Minister has taken a very deep move. Everything I'm seeing, the way he's saying how the checking at the airport, it has all started from somewhere. So it is we are in India is absolutely fine, but to be in contact with the people. So definitely there is an impact of world over. They don't know what how things are happening, but for sure all the government is acting, and whatever is coming forward, everybody is getting ready for the medical side or any other measure to hold on.
Globally, Mr. Agarwal, all central bankers are pressing the panic button. They are having this approach of we will do whatever it takes to stem the fall. Do you think Reserve Bank of India and our government really needs to act soon, and a rate cut is something which is not important but crucial and necessary now?
Yeah, India has a different situation than the world. If you see, we are 1.4 billion people, and we have our own economy, we have our own agenda. We are in a different, very, very different position where today we are a little bit less impact than the world, because most of the country, what they produce, they look to export. Even if you look at export to China, export to other places, in India, we have shortfall of everything. So it is a very, like if you see in our resource side, whether it's a BHP, Rio, all these big companies, they all depend on the China, and they can't export at this point of time. In India, whatever we produce, by and large, we can consume ourselves. And Reserve Bank, putting more liquidity will definitely help. The other thing which is very important, that our company is mostly driven by the company, and companies should be encouraged to buy back their share. And in the world, there is no tax on the buyback. And India has a 22% tax on the buyback. On very emergency measure, that 22% tax to be removed. So companies who's confident on their companies should be encouraged to buy back their share and bring their stability in the market.
Right. But Mr. Agarwal, what measures can the government really take at this stage to try and give that leg up to India Inc. to be able to do business better in these stress times?
No, government is responding. The Reserve Bank, I can see the government is definitely responding. We cannot follow what others are doing. We have our own economy. We have our own situation. So in that, whatever our priorities we are doing in India government is doing step by step. I can definitely say that we are definitely better positioned than anywhere in the world. Anywhere in the world. So I can talk about generally, in the government, more and more, if they start the infrastructure expenditure, they start, so the common man get the money, and then they can buy in the market. So it's just now a circle. So this is a very different situation. I know that RBI government are on it, and whatever is necessary, they will do it very quickly. But for me, removing this tax on the buyback is very important.
Right. Mr. Agarwal, something very interesting that one is seeing, that China is actually getting back on its feet. You are seeing, people beginning to resume work. Just yesterday itself, it seemed that Wuhan has declared itself corona-free. They're starting production, slowly beginning to start off factories as well. But the rest of the world is pretty much in shutdown mode. If China's demand for commodities actually begins to kick back, do you think that's going to be enough to prop up the prices back as well?
Yeah, if you see China has started on the back of it, the world definitely world will emerge. At this point of time, you cannot say what is going to happen. But one thing for sure, the producer of oil and gas, producer of commodities, of copper, aluminum, zinc, iron ore, are very limited. There is a very limited people, because these are the large projects. And I don't see any reason the demand supply gap will be there. It is the only time. And I have seen the fall. If you see the fall has happened about oil and gas has definitely gone down to 50%, but other commodities is about 10 to 15%. And I have a very strong feeling that it will bounce back. As far as Vedanta is concerned, we are the lowest cost of producer. So we will stand by. We are, if you see oil and gas, we are producing, our cost of production is about $7. Their all in cost is about $20. And we are tightening our belt, and how can we remain as the lowest cost of producer? India has a great advantage. So as far as the commodity is concerned, almost 60-70% of commodity we import. And I think the time has come to accelerate, to have increase our own production, so we can increase more employment and more jobs. And government will be huge benefit.
Mr. Agarwal, I respect that you have a huge advantage in terms of cost and in terms of in terms of size. But the bottom line here is that commodity prices have come down and it's been a straight line vertical fall. How will this impact your near-term financials and outlook?
Yeah, if you see the aluminum, we still have 10% margin on $1,700 of aluminum. In zinc, we still have 25% margin. Silver is a byproduct, so we are very comfortable in the silver. If you look at our oil, as I said, the oil, this $30 is not right, but we have our cost of production probably the lowest in the world. So we will survive and will not stop our growth project. We are going to complete, because it is very important that the 85% oil we import, we produce our own oil. So I'm looking overall, as far as Vedanta is concerned, everybody is going to die. We are going to die last.
But Mr. Agarwal, what about crude? I mean, crude prices are in this epic slowdown. You're one of the biggest producers of oil in India also, especially because of after the acquisition of Kane. What happens to that business? And would you be looking at your capex plan? How would you plan future of your oil business in this kind of an environment?
Yeah, sure. We have already planned to invest $4.2 billion, out of which half have been already spent, to create from 220,000 barrel to go up to 450,000 barrel, and which is absolutely planned, and will not stop that. We are further tightening our belt, whether we can reduce our capex, and we are working back to back. How can we reduce our capex? And we will not stop. We have enough cash flow. We are not depending on the borrowing. We have enough cash flow to fund that expansion. But we are looking in 2 years' time to produce almost 500 million barrel in India, including the gas.
Right. Mr. Agarwal, the last time there was this liquidity boom, one saw all commodities, be it oil, be it metals, aluminum, even some of the softer commodities actually surge up. What's the probability of us seeing something like that repeat itself once things settle down somewhat?
I don't see, as far as India is concerned, government is also watching, and government is also going to support if there is any unethical anything dumping ground for India to pump in. And I think no matter what happened, India has a completely saturated as far as the demand supply is concerned. I don't foresee any reason this thing to affect us.
Isn't this the... Mr. Agarwal, pleasure having you on the show. Thank you so much for taking the time out and joining in today. That's the word coming in from Anil Agarwal from Vedanta.